If we fast forward to December 2025, which is 1 year from when I recorded episode 197 of the Martini Mortgage Podcast, there will be one word used to summarize 2025. And I think that one word will be resilience. Moving forward despite of adversity and being persistent with the ability to absorb change is how I define resilience. Resilience in the real estate is not just a good thing for homeowners. It's an opportunity for home buyers. We've all heard the proverb, the best time to plant a tree was 20 years ago. The second best time is now. It is a timeless reminder to start working towards your real estate goals without further delay, even if you regret not starting your real estate journey earlier. I have firsthand confirmation that there's no such thing as timing in the real estate market. It's all about time in the real estate market. This is where generational wealth is made. Before digging into the Martini Mortgage Group 2025 housing market forecast, I must make these legal folks happy. So I am Kevin Martini, and I am a certified mortgage advisor and producing branch manager, NMLS 143962, with the Martini Mortgage Group at Gold Star Mortgage Financial Group Corporation, NMLS 3446, Equal Housing Lender. The primary purpose of this podcast series is to inform, entertain, and educate. The information, opinions, or recommendations presented in this podcast series does not constitute legal or other professional advice, opinions, or endorsements of any kind. Now, with that out of the way, and as a primer, no quality asset, no stock, not gold, or even real estate goes up endlessly. They all have their ebbs and flows, sometimes stagnation, or even dipping before hitting new highs. I share this because with an open heart and based on a deep dive into the data, I believe that today's real estate prices are the lowest we will see in my lifetime. The Martini Mortgage Group 2025 housing forecast will address three components: mortgage rates, home sales, and home prices. Let's start with my favorite subject, mortgage rates. It is my opinion the Federal Reserve will continue with its rate-cutting cycle. More on the Federal Reserve's rate-cutting cycle in a moment. What I'm about to share is shocking to many because it shifts their paradigm of what they believe. So please pay attention because this is very important for you to know and very significant to understand. It's critical to share that the Federal Reserve, nor do their actions directly impact mortgage rates. For context, mortgage rates live in the bond market, and the bond market dwarfs the stock market in terms of outstanding value. The bond market works in real time and within the moment data, where the Federal Reserve makes decisions based on what they see in the rearview mirror. And the bond market is like a plane. You see, planes don't have rear view mirrors. And they move forward and may adjust their altitude and speed in real time based on what's happening at the moment and what they see ahead. If you are multitasking, let me say it again. The Federal Reserve has no control over mortgage rates. However, the Federal Reserve sets the tone for the market. Economic trends drive the bond market and in turn, mortgage rates. In 2025, myself and the Martini Mortgage Group forecast mortgage rates will have a real potential to drift higher with sticky inflation for a brief period, then shift significantly lower. If I had to put rates to the forecast, I believe that rates could range from a high of 7.25 to a low of 5.75 in 2025. In 2025, we will see easing mortgage rates. And to prove my thesis, let's look at history. So let me come back to the Federal Reserve's cutting rate cycle. It started in the third quarter of 2024. From peak to trough, it is likely to see a 2% movement in mortgage rates. Yes, my forecast is on the conservative side with a hope to exceed expectations. There's no question in my mind and the minds of many experts that lower mortgage rates will boost the housing market. Case in point, did you know that when home loan rates move lower by just 1%, 5 million more home buyers are able to afford to buy a home? This will put pressure on a tight inventory supply of homes for sale and will likely cause a surge in home value. It's basically economics, folks. More people having the ability to buy a limited supply of homes will cause higher home values. Now, this is a great place to transition to home sales in 2025. I project that 5.4 million homes will be sold in 2025. The numbers for 2024 are not in at the time of recording since 2024 hasn't ended yet. But at the current pace, it is likely we will close 4.7 million units. In 2023, there were 4.8 million units sold. So 2025 will likely surpass the last 2 years. There will also be a boost in 2026. What I'm about to share is not meant to be controversial. I'm just sharing the fact. There needs to be more supply of homes to meet demand. In the U.S., we are short at least 4.5 million homes, plus or minus, and this deficit continues to grow with household formations. So when you see or you hear the term seller's market, this is not a signal of whether you should buy or not buy, but rather an indication of the supply of inventory of homes for sale. I think we will be in a seller's market for a very long period because it will take at least decades for supply to reach the demand. And again, it's back to Econ 101. When there's limited supply for a product that people need, prices will go up. And we all need a roof over our head. In short, when you hear somebody says seller's market in real estate, to me that means buy now. The third component of the Martini Mortgage Group 2025 housing forecast is home prices. At the Martini Mortgage Group, the gold standard for future home appreciation is the Home Price Expectation Survey, since it's not the opinion of just one, but the opinion of over 100 market experts. On the aggregate, 2025, according to the Home Price Expectation Survey, will bring a 3.6% appreciation. 2026 will bring a 3.6% appreciation again. Over the next 5 years, the most pessimistic of the panel are projecting a 5-year cumulative growth of 14.1%, whereas the most optimistic are projecting a 5-year cumulative appreciation of 39.9%. And the medium of panel-wide are forecasting a 27.2% 5-year cumulative appreciation. Let me highlight that even the bears in the market are forecasting that home values will continue to rise over the next 5 years. Granted, not at the pace that we've seen in the past, but past appreciation of double digits is not sustainable. You could say that we will have a period of deceleration of home values compared to recent history, and you would be correct. However, deceleration is not the same as depreciation, since home values during periods of deceleration are still rising. I would challenge anyone that normal is a good thing. And is a sign of a healthy real estate market, not a weak one. And we see 2025 and beyond as a very healthy market. In closing, forecasting is a tricky proposition since there's so many external items that could impact. However, based on the research, we at the Martini Mortgage Group believe that real estate is green and growing, not ripe and rotten, and right now is a unique opportunity, an unprecedented opportunity, and the next best time to plant that proverbial tree. For breaking news and developing stories, stay tuned to the Martini Mortgage Podcast or check out our Learning Center on our website, which is www.martinimortgagegroup.com. Thank you for tuning in to this episode 197 of the Martini Mortgage Podcast, which is called the Martini Mortgage Group 2025 Housing Forecast. If you have questions, I and the entire Martini Mortgage Group are here for a confidential, no judgment call. I'm Kevin Martini, and you can reach me by dialing 919-238-4934.